Hello everyone. Today we will talk about today's trade on BTC. First, let's look at the chart of the day. As we can see, there are not very many changes between us and past trades, just the same buy liquidity on the side of the upper lower level of SMT from above. Also, what we have left from the past days, this is the liquidity on the sell side, which is the low of Tuesday, after which the further upward movement began from what we can see, but unfortunately not marked on this chart. This is our daily FVG. It is also the band of H4 FVG and H1 FVG. From what we have today, this is SMT. Let's take a closer look at the H1 chart. If you have watched the previous videos and previous trades, we had a target which was the London high of the strike zone, which acted for us as BSL, and the H1 FVG, which acted for us as a target for a possible DOL. But it is also currently the H4 FVG zone and the daily FVG zone. For me, this is important because I keep in my mind that we have some other FVGs in a certain zone. Maybe some people don't use it, but it's important for me to know that there is something else in this zone besides just one HTF FVG. Now let's take a look at what we see on the chart. We have a sell side liquidity, which is a PDL grab, after which we had an upward movement. Then what we see is an SMT which formed, and we got a divergence between Bitcoin and Ethereum. Then we have a H4 FVG fulfill, on which the price corrected and got a primary reaction. Then from previous videos, I said that we pay attention to the midnight opening in New York, and we also pay attention to the session liquidity points, which is high or low. In this example, we have buy side liquidity at C London, high, and buy side liquidity DC Asia, high. The primary liquidity zone that the price will move to is BSL, London high. Plus, it also merges with the midnight opening in New York. So this becomes our obvious liquidity pool first, and we have Asia high second. Now let's move to the M5 chart from the H1 chart. We remember that we have SMT on the lows and that we have two obvious liquidity pools, which are London high and Asian high. Now let's look at the M5 chart. We see that on the M5 chart, we have first is a structure violation in the time range 8:30 and the formation of a block order plus a SMT, which is also formed on M5. But we remember that we have another SMT, which is bigger. So accordingly, we get a double confirmation that price should move towards the obvious liquidity pool. As we remember from the previous videos, the 9 a.m. pattern is that you should take a move towards the obvious liquidity pool on the initial liquidity spike at 9 a.m. So as you can see on the chart, my position was opened with a market order when price reached the M5 block order and take profit at 2 RR just at the London high zone. If you now look at the Bitcoin chart, you will see that the price reacted at exactly this point where I took profit and got pulled back. So we can conclude that the kill zone session windows have an impact on the price, along with the midnight opening as the closest liquidity pools. The idea is almost exactly the same as in the previous trade, so I hope this video was useful to you. Please comment and suggest how it can be improved or changed to make it more understandable for you. Thanks for watching.